Okay, this is an analysis of the Goldman Sachs crude oil exchange traded fund. And today is December 12th, 2014. It's just a little after 1 o'clock. And I want to point out this chart. And if you look at this chart, crude oil is bad, really bad. So good if you're short crude oil. But it just goes to our deflationary theory about the economy. And when crude oil is going down, that basically means a lot of people don't need it for manufacturing, travel, things like that, because there's not a lot of money floating around the society to be able to afford goods. And therefore, the oil is high in supply, low in demand. And of course, when that situation happens, and it happens in excess, you get a significant drop. So that's what's basically happened, is right in this area here, you started to see some dropping under the 2250 area, and the selling just basically accelerated. You can see the volume down here. You can see the Genius indicator was the first indicator that that started to go down, and that was right here on that same week. This is a weekly chart, by the way. And so when you look at that week, that's your beginning indication that oil is starting to go down. Now, we haven't traded this, but we have been watching it, because at some point there's going to be a capitulation. And a capitulation means that's when all the sellers are out of it and everybody that thinks it's going to bounce starts to buy in, and you're going to get some significant moves, a lot of volatility on an upside move. But I wouldn't touch it right here because there's so much selling. Notice all the increasing volumes, 3 weeks of increasing volumes on the sell. One week, try to just hold it in there, but it still is part of an overall couple of month downtrend in oil. And if you watch CNBC, you hear all the pundits that seem to know everything on there saying, oh, oil can't drop below $90. And then you watch them a couple weeks later, oh, we think 80's the floor, and then 70's the floor, and then 60 now is the floor, and it's below 60. So I'm even hearing calls for it to go to 32, and I think we have a better chance of it going to 32 than we have back up to 100. And if you look at the way this chart sets up, everything was flat in here to slightly increasing, but now the economy is deflationary. And the reason you're getting this move is because of the Fed, in our opinion. And the Fed has put in tons of money, and now when that money comes out, it comes out very quickly, and there's nobody there to support it because they're moving that money to some other sector. And you're going to see this to be one of the first sectors that starts to fall. And we think there's a few other sectors that you should watch out for next, but the crude oil is the first one, and that's economically tied to the economy with manufacturing, transportation, etc. But pretty soon you're going to start to see a lot more commodities fall. Gold has been showing some weakness, although just in the last couple of weeks it showed a lot of strength. Because oil has been declining, people have been putting money in gold, and that's why it's been going up. But we still think gold is deflationary. And when the whole economy becomes deflationary, you start to get lots of crashes. So we think this is the first one. We don't think it's too far away where we're going to get a treasury crash. And when something's not paying any interest and the value of those treasury bonds continues to go up, we think that's ripe for a correction, and it's going to be a correction just like this oil market. So keep an eye on the oil market. We might take a look at jumping in on a capitulation. We don't necessarily like to do that. We're trend traders, but there's one of these days or weeks that things are going to bounce very quickly, and there might be some profit making opportunities on the upside. So that's your gold analysis for today, December 12th.